Hey, people on the internet, this is Chris Jane with the Reef 38 podcast. All right, I'm not Chris Jane,
No,
but I
you're
am
not.
here with Chris Jane today. I have decided to MC this particular podcast because today we're going to be talking all about insurance, and Chris being our resident insurance agent as well as a all-star real estate agent in the Live 38 office is the one who's going to be in the hot seat for that. So today we're going to be talking all about insurance, all the things you need to know if you were interested in the Florida insurance market, anything that's going to pertain to that. We're going to defer to our good friend over here. So without further ado, good morning, Chris.
Good morning, bro. Thanks, man. You're not Chris Jane.
I am not Chris Jane, that's right.
Yeah. Stoked about today. There's so much that we could talk about. We're going to try to keep it kind of thin and hit on some things that apply to us as agents and that can be helpful to agents. As we've talked about, like, we want to help people win in real estate, want to help people win with insurance and in life. And so this is the first episode for us to talk about something different other than real estate and faith.
Yeah, and I'll just say, as a real estate agent myself, I have no insurance background like Chris does. Insurance is probably one of the most common things I get questions about. Like people, especially people out of state, they see headlines or they don't read too far into it. They just hear these horror stories about insurance in Florida and that it's through the roof and sky high and all this stuff. So I think one of the first things we should jump into are what are some of those key factors that affect Florida buyers or anybody in the Florida real estate market when it comes to insurance. What are those factors that are impacting premiums, and what are the things that people need to be aware of right now?
Yeah, I'll just give a quick kind of info about how long I've been doing this and where I'm at, and kind of give a background history on that, and then jump in. So I got my insurance license, my life and health license in 2003.
Oh, wow.
So long time ago. Moved down here, as I shared last week in my testimony, moved down here in 2001, got my life and health in 2003, did some stuff with Aflac for a minute. And then Aflac, which, I mean, has its place. And then in 2007, got my current job selling P&C and helping clients on the P&C side, which is property and casualty, for those that don't know.
For those of you who don't know.
Yep. So P&C is homeowners, auto, commercial business, workers' comp. You get into the life and health some too, but a lot of it's the home and commercial. And it's been, I love it because it's all relational, just like real estate is.
Yeah.
And so I've been at Fuller Insurance the whole time. Our office is on 98, so it's not far from here. And it's been a huge blessing to have that job. So to your question, though, there's a lot of different questions that people ask whenever, we've talked about it with your clients. I've talked about it with other agents here in the office. But the main things that insurance can be a struggle with certain houses and with agents are roof issues or year of roof. And so I'll jump into kind of a history of that for the past, what year are we, 2026? So 8 years-ish, 6 years going back to 2018, Hurricane Michael and COVID and just how the market changed. So I'll talk about that here in a minute. So you have roof year, the age of the house is the biggest factor for homeowners rates.
Right.
And so if you buy an older home, your premium is going to be higher. That's pretty common sense, I think, for most.
Yeah.
But other factors other than roof age would actually be, does the house have hurricane windows? Does it have updates? Does it have a new water heater? Does it have a new HVAC? And some people don't think about that because they're coming from different states. They don't have the same guidelines that Florida carriers have.
Exactly.
And so the water heater actually is a big one. Working with a client right now, I think two of the water heaters, both of them in the house are 21 years old.
Wow.
So it's a 2005 house, original. It works fine, but the carrier is like, we have a guideline, we have a set rule, and if it's over this year, then we're not going to write the policy. You're going to have to change it. And so there is some flexibility and leeway when it's a new closing that the insurance company will give when they know, okay, the buyer can't do anything to the house, so we need to give them a 30-day window to get these replaced, or whatever it might be. And so that didn't always happen. It did years and years ago, but during that COVID season or right after that, it didn't. So
is it like a preliminary thing? Like they'll kind of offer this grace period to get something closed, but then like you have sort of like a contingency for your insurance? Okay.
Yeah, to some degree. And so I'll talk about that a little bit. So 2018, 2018, October, Hurricane Michael came through Mexico Beach, and it kind of sparked a lot of stuff with insurance companies. And there's a lot of things that you can go look up, because most of the change that happened from 2018 probably to 2021 were based on legal things and attorney fees, one-way fees.
Yeah.
Do you remember that?
I do.
And so you can go and read all of that info, and I think the number was like 79% of claims would go to attorneys. The claims money.
Yeah.
Which is
that's insane. Yeah.
Insane amount of money. Mm-hmm. And so that's why there were so many issues. And folks were like, they were wondering why it was so expensive. And it's like, oh, because the windstorm. And honestly, it wasn't that. There were a lot of fraud things happening too with roofers. And again, just the way the state was set up, it was set up for failure for such a long time. And so DeSantis, they had 2 legislative meetings. 2021, I think maybe late 20 and then early 2021 or like May, they finally signed into law to help mitigate and alleviate some of these issues. And it's taken 5 years to get there. And so that's why, so now 2026, we're in what we would call as agents in a soft market.
Okay.
I don't know if you've ever heard of that before.
No.
So you have, with insurance, you'll fluctuate between hard and soft markets, meaning soft market, the insurance carriers, there's a plethora of them. Mm-hmm. Their rates are competitive. Like they're wanting to write business. They're not going to be super difficult on underwriting guidelines for the most part. Back 2021, 2022-ish time frame, you had a lot of companies that went insolvent. If you're local to the area, or maybe you're not, and you just own real estate, you're very familiar with the insolvencies.
So it's like a customer favor. So soft market is kind of like a customer favoring market, and then a hard market would be like a carrier favoring market.
Yeah, if you want to relate it to a seller market versus a buyer market, you can to some degree. But yeah, I think that's a good analogy.
Okay.
And so there were minimal. I'm going to say minimal. There were only a handful of carriers, probably, and I'm an independent agent, so I have access to a lot of carriers most of the time for homeowners. And I remember in 2021, or right about that time, I mean, I probably had 3 carriers that I could quote with a lot of the time. 'Cause a lot of them were insolvent. They changed their guidelines, like the roof guidelines were like, hey, if you have a shingle roof that's over 15 years old, you got to replace it. So during that time frame, I don't know if you had a closing during then.
I did, yeah. And that's what I was telling people. If the roof is anything older than 15, we're going to run into an issue.
Yeah. And even metal roofs were like 20 years old.
Yeah, which just blows my mind.
Yeah, there were some things, again, so they had to tighten up so much on their rules to stay in business.
Gotcha.
And again, you can go read a lot about this information, and it's, I would say a good majority of it's probably pretty accurate. But again, talk to the professionals in the business, and
such as yourself.
Yeah, I've been doing this for a long time, 19 years, and so we talked about the age of the house, the roof,
water heater, HVAC.
The systems of the house are important. I mean, the main thing with the water heater, I'll say this. The reason water heaters are such a big issue for insurance companies, and I don't know why it's Florida, but that age, like, it spikes claims. So if you have a 15-year-old water heater inside the house and it just goes bad and it starts to leak or does something, and you're paying out a $20,000 claim on wood floors.
Right.
And insurance carriers are like, we ain't doing that. So we're going to advise you to replace it, and if you don't, we're not going to write the policy.
Do things like location of the water heater matter at all? Like if it's in the garage, it's not going to ruin the floors, obviously.
Yep. So that's one thing that they have set, and they give an extra 5 years on that.
Okay.
And so instead of 15, it's 20. And so, yeah, having a tank in the garage is important too. Okay. It's helpful. The other side of that is tankless.
Right.
There's no age. because most of the tankless are on the outside of the home. Sometimes they're in a garage on the interior. Sometimes they're in a closet on the inside of the house. I've seen that as well.
Yeah.
But tankless, as far as I know right now, or have known for 19 years, they don't have any issues with that.
And if you have a good plumber, they're going to plumb that to where it's going to flush out to the outside of the house
Correct.
anyway if there was an issue or something.
Yep.
Gotcha.
Yep. So systems, and then the other factor that we talk about a lot is whenever you're buying a house, I mentioned this, so hurricane windows. For agents that are helping buyers, and even with sellers too, I think it's good for agents to know, okay, if a buyer comes along and they need to get a wind mitt done or a 4-point inspection done. Are you familiar enough with those to?
Yeah, but for the sake of the people watching, why don't
Yeah.
you edify us a little bit on that inspection process?
Yeah, so whenever you go under contract, you're going to get a standard real estate inspection done. You're going to hire a company, your agents, like, I'm going to help somebody, you're going to help somebody. I'm going to have a list of my preferred inspectors. I'm going to say, these are the inspections that you need done. You know, you have your WDO and things like that as well. But if it's a home that's over 15 years old, you're going to get a 4-point. You have to. Again, you have to because of the water heater age. So if it's 15 and over, a 4-point is required. And I caveat that a little bit now because of the soft market, because some of these companies have said, we're okay with not having it if it's over 15.
Really?
And it's only 1 or 2 carriers.
So it's getting a little more relaxed?
A little bit. But again, like to make sure you get the best rate, to make sure that you're covering all your bases. I mean, doing a 4-point wind mitt, they lump it together.
It's nominal. I encourage all of my buyers to get those inspections regardless of the age of the house. It's worth it just to have it. I mean, if anything, it'll save them a little bit maybe on their premium.
Yeah, absolutely. It definitely will. It just makes it a lot easier for them. It's it's a peace of mind thing, knowing that I've done everything possible to give myself the best opportunity to get the best rate, and to give the carrier a reason to give me the best rate and to write the business.
Yeah, and Florida's a buyer beware market, so it's
Right.
to your advantage to be doing those kind of inspections anyway. Rule those things out.
Yeah, yep. That's a good term that we don't hear a lot of, buyer beware.
So from my perspective as an agent, what are some things that, you know, we just talked about like the wind mitt and the 4-point inspections. What are some other things that maybe buyers can be proactive about going into the home purchase process? And then the inverse of that, what are some things that sellers can be keeping top of mind if they want to be bringing their home to list? Are there any things that can kind of, I know not necessarily impact the premiums. Obviously, if they replace the roof or something like that, that will. But just for things that to have on hand, things to keep in front of mind as you go through that process.
Yeah, I say from the seller side, if maybe you have a home that's an early 2000s, you've replaced the roof, you know the roofer, because this is something that happens a lot of the time too. A buyer will come try and get information on a roof, and they're like, we don't know who did the roof.
Yeah, there's no permit pulled forward or anything.
There's no permit, or maybe there is a permit, but kind of leading up to there's a what we call peel and stick, or contractors call peel and stick.
Yep.
And on the wind mitt form, it's called secondary water resistance, SWR. And so the only way for that to show and get a credit for buyers is if the inspector gets in the attic, they know what they're looking for. They're looking between the gap of the board, and they can see the black sticky stuff.
Right.
They usually stick their ruler up there. They have to take photos of it. If there's spray foam, you can't see that.
Right.
Which a lot of the time now, for newer homes at least, there's spray foam. So if there's a seller, it's like, hey, we replaced our roof, we got the peel and stick done, but we also spray foamed or whatever, the roofer needs to provide proof that, hey, within their invoice or their quote that they did had the peel and stick.
Okay.
And so that's actually one thing a lot of people don't think about, because that SWR credit on an older home is actually pretty significant.
I would think so, yeah.
I mean, it can be easily $500 on a premium.
Oh, wow. Okay.
Yeah. That's typically on an older home, because your premiums are higher, your credit's going to be larger. Especially, you get these, I'm just thinking of a neighborhood right around us over here, like on the golf course. They're built in the early 2000s, maybe some of them the late 90s. And you replace that roof, getting that SWR credit's important.
Okay. Yeah.
So if they want to share that win mitt, say they get that done, they can share that win mitt with the buyer.
Oh, okay.
The buyer doesn't have to have it.
Is there like a time frame on that?
So that's another thing that's kind of fluctuated too.
Okay.
Back when the market was tough and carriers were being really strict, they said, hey, we're going to have a 4-point within 12 months
Okay.
or whatever it might be. There's a new win mitt form that actually just came out very recently. And so if you don't have the new win mitt form, it's fine. But again, because it's a soft market, most of the carriers, I would say within the last 5 to 7 years, if you have a win mitt, it's going to be okay to use.
Okay.
To pass along.
Wow. So, I mean, so that's good. That's good insight for sellers because, I mean, anytime I list a property, I'm always encouraging, let's do a pre-listing inspection. But that's
Correct.
just a general inspection. But if it's a home older than 15 years, it would be to their advantage to go ahead and get the win mitt and 4-point because then it could potentially transfer over to the buyer, right?
Yeah, and they likely have one.
Mm-hmm.
So having that on hand, knowing, okay, maybe I don't know where it's at, who do I ask? So they can ask their agent and maybe just ask their realtor too that helped them buy the house. If they're selling it a couple years later, like, hey,
Yeah, but I
where's
mean,
that
if it's
win
older
mitt?
than 15 years, then, you know, that win mitt and 4-point is going to be long gone by that point. So.
Yeah, if the form itself, yeah.
Yeah, so I'm
That's
saying
right.
if like a house was built in like '01 or something and somebody has had it since then
Yes.
and they wanted to list it, then it would be to their advantage to do
Yeah,
that.
very
Okay.
advantageous to have that done.
Cool.
Making, as you and I both know, making things easy for buyers,
Mm-hmm.
it's just like, why wouldn't you do that as a seller?
Just in general, I would think making anything easier for the transaction in general, regardless of what side you're on. Like when I'm listing a property, I'm thinking of all the things that I would be asking for as a buyer's agent because I want to
Yeah.
shove them all in the documents tab immediately. Like when I list a property, I want to be as close to done with everything as possible. So being proactive like that's super helpful information.
Yeah, absolutely. I'm trying to think if there's anything else that I missed from your question.
No,
about-
I think you pretty much. I mean, from a buyer's perspective, is there anything other than if they haven't performed those inspections, probably performing them on your own, but anything else that a buyer should be conscientious of? I actually have a question to kind of tack on the back of that.
Yeah.
Because I really wasn't aware of this until relatively recently. Like a lot of people will have like their Allstate agent or their State Farm agent. Are they kind of confined to their own insurance?
Yep.
Okay, versus someone like you who you're an independent agent, so you have access to a lot more. Can you kind of explain the differentiation?
It's a bit nuanced just
Okay.
because in Florida, the state has given some of these agents, and I forget what year it was, being in the insurance since 2007, the win mitt form actually came out really like right around that time. And I actually stole a lot of business and won a lot of business from agents that they're called captive. So a State Farm, Allstate, Farmers, those types of agents, they only can write business with State Farm
Right.
or Allstate, whatever it is. So I forget how many years it was, but the state of Florida allowed them to start writing business with like Citizens along with their State Farm policy. And they fluctuated, ebbed and flowed. State Farm has of like, oh, we'll write business. No, we won't write business. Oh, yeah, we will. Like they're in and out of the market. And so as an independent agent, I have access to a myriad of carriers. And regardless of how many, I'm still subject to underwriting guidelines.
Right.
So being that we have so many short-term rentals in the area, we have to have companies that write those. But yeah, I think to your question, it's being an independent agent, I'm able to do, I think, a little bit more than a captive agent can.
Okay.
And so
You
think
can certainly be unbiased, right?
exactly. So we're in some sense, our client is the buyer and the insurance company, if that makes sense.
Okay.
Because we're representing the insurance company, and we don't have any ties to any specific one.
You're kind of like the transaction broker between the insurance agent and the client, right?
Yeah, we have. I mean, we're gonna give our client the best option based on coverage, based on if there's exclusions on a policy. We're gonna talk through them and make sure that they're in the best spot and get the best premium possible.
Yeah, that's a world of fine print that I couldn't handle, man. I commend you for that one.
Yeah, it's, again, you're dealing with a lot of different things, and I don't know, I enjoy it because it's just, again, it's all relational.
Here's a question for you. What are some of, we've talked a lot about like things that are specific to the Florida market, specific to buyers or sellers, the client. What are some of the external factors that influence the insurance market in Florida?
That's a good question, because that often, I think, is missed. So if you're purchasing, maybe you're from Nashville or Atlanta or Dallas or something like that, and you own other properties and you've had a claim on other properties, that's an external factor that's going to affect your insurance in Florida.
Okay.
It doesn't come up very often.
Shows up on your permanent record.
It shows up on your record. And so what the insurance carriers have, they have their back-end software that's going to pull soft credit and claims information, because you have to give your legal information, your date of birth. You don't have to give your social every time. I have one company that does that. And so they're ordering, it's not like a typical credit score, it's an insurance score.
Yeah, that's kind of what I was thinking.
Yeah. And so you have that on the personal auto side, you have that on the homeowner side in relationship to claims. And so if you have a claim and it's an open claim and you didn't know it was open, you got to close that claim.
Okay.
I've had that happen before, and it's not difficult to do, but
so it's kind of like title work, like if there's like a lien on you.
Yeah,
Okay.
to some degree. Yep. So that's something that's an external factor that a lot of people don't think about.
Okay.
And so we'll go through that as we look at a client's information. And so one of the things that we do at our agency that's kind of sidebar is we make it really easy for buyers to get a quote. We're going to send them an electronic form to fill out, and it's going to give them all the things that they need, and it's going to shoot it back to us via email, and we're going to have it in our platform, in our system. So the agency owner, Garrett Fuller, he has his master's degree in business, but he also writes code. And so he built our whole platform.
Yeah, I remember you telling me that.
Yeah.
It's pretty impressive.
It's sick. It's so
It's
cool.
sick.
Yeah. Yeah. And so when people come in my office, I have 4 monitors that I work with. I look like a stockbroker. And then I have one monitor for the client too, that they can see kind of what's going on. Like I said, it's kind of a sidebar, but external factors, that's probably the biggest one. But just being knowledgeable about, okay, if I buy a specific house, if it's a newer house, I know it's going to be easier than buying an older house, especially if there's no updates. Outside of that, I mean, knowing that, yeah, my credit might have a factor in my insurance rate. Like a company that we write with is Frontline Insurance, which you've probably heard of. They're a company that's been around for a long time. They're the one company that asks for your social whenever you go through the application and bind the policy.
So they're looking at your credit score as well. Okay.
Yeah, which can, again, if you have a good credit score, I mean, I've seen rates decrease by $600-800 sometimes.
Wow, that's substantial.
Yeah, and of course the premium's substantial, but yeah, it's a good thing. One thing I wanted to just go back to, you asked about some of the other things that buyers should think about. So flood insurance is a big one.
Yeah, definitely.
A lot of agents, and I've talked with so many agents over the years about this, a lot of agents will tell buyers, oh, you're not in the flood zone. And it's like, that's not true. And so what they mean is you're in an X flood zone.
Right.
Which that's the preferred flood zone.
Actually, we could probably pause here and just back up. I mean,
Okay.
You've been down here for so long. I'm from New Orleans. Flood zones and flood insurance is all very common to me. But for the people that aren't watching, that's probably a pretty mysterious thing. Now that we're talking about it, I've had a lot of customers that have come in from out of state, and they have a ton of questions about flood zones. Do they need flood insurance? How much is it? All that stuff. So take it with all of that, because there's a lot of questions that a lot of people have in regard to that.
Yeah, I would just say kind of what I was hitting on was, if you're an agent helping a client, don't talk about flood insurance if you don't have the info, because it's, as we were talking about before we started recording, it's an E&O issue for you as an agent, which is errors and omission. Like if you're giving a buyer bad, inaccurate information, you're negligent.
Right.
And so if they buy a home and you're like, oh, this isn't in a flood zone, and they flood, they could,
You're culpable.
they could absolutely file a claim against you
Mm-hmm.
as an agent, and then you have to go through all the fun legal stuff of that. So, it's an area where everyone's in a flood zone.
Yes.
And so you have flood zone X, which is called the preferred zone. You have AE, which is the next level, which gets you into what's called the special hazard flood zone. And then you have A, which is another step. If you want to go up or down, it's usually a higher rate going from AE to A.
Mm-hmm.
And then there's VE, which is typically your beachfront or bayfront, depending on what part of the strip of 30A or 90A that you're on.
Mm-hmm.
And so, or scenic 90A, really, Panama City, whatever it might be, Front Beach Road, all of that. So, one thing that a lot of people don't know either is Florida has, from doing my research and looking things up over the years, and I still think it's the case, they have the lowest flood insurance premium rates of any state.
Really? I
Yeah.
wouldn't be surprised. I mean, I think about, like I said, coming from New Orleans, where it's like our highest elevation was like 4 feet above sea level. You know, here I think we're sitting like 20-something feet above sea level.
Yeah, you have some pretty low premiums on flood.
Mm-hmm.
We're in a position right now, just from a mapping perspective, that FEMA, they've done, I think, a really good job of remapping and getting as accurate as they can. We have so much data now for flood zones. And so most everything on flood is public information too.
Yeah, and actually on that note, in the description down below, we'll have some links to like the county flood maps and stuff like that. You can get a pretty clear idea of what that looks like.
Yeah, the one that I use the most is the Northwest Florida Water Management District.
Mm-hmm.
I think I've mentioned that to you. I don't know if you use that
You've
one
probably
or not.
sent it to me before, yeah.
And so that's the one that I use the most because I think it's the most accurate, and it'll pull so much data that's so helpful. You can go on to FEMA and pull that info as well and get a different map. There's one I found, I think it's a Okaloosa County one recently, the GIS flood. But yeah, flood insurance is obviously it's a big deal because of, I would say, going back to Hurricane Katrina. I mean, that was an event that was nuts.
That was my senior year of high school.
Yeah, it was crazy. And so you had flooding, you had wind, you have all these different things, and a lot of people didn't have flood insurance because it was so expensive.
Yep.
I mean, you're, like you said, 4 feet, whatever it might be, you're below
Bowl, man.
Yeah, it's not great. So for people buying flood, it can be expensive in a minimal amount of homes and areas, but for the most part, it's pretty affordable.
What I tell people, and you're welcome to kind of expand on this, is that anytime you live anywhere you're near a storm-prone area, which we are along the Gulf Coast, people, they hear flood insurance and they think it strictly relates to groundwater rising.
Mm-hmm.
But really, flood insurance covers things that your typical homeowner's policy will not cover, right?
So the two things that I say, so you have rising water and surging water.
Right.
That's the language. And so in a standard NFIP or FEMA, which NFIP is a National Flood Insurance Program, which is government flood essentially.
You knew that, right?
Yeah. The language in the policy states that it has to cover an area of 2 or more acres to be insurable.
Okay.
And so if there's a flood event, I mean, it should cover way more than 2 acres.
Probably.
And I've told people recently, probably more than the 19 years over the past probably 6 months, of if we have a flood event here locally, it's probably coming from a tropical storm because it's going to be a deluge of rain, and it's going to be for a day or two.
Be localized flooding.
Yep, it's a localized flood, and it's typically bayside, and we have so many little inlets and channels of water, and then you also can get flooding coming up. I mean, our water table is not...
It's pretty high,
Yeah, it's not super low. I mean, you don't have to go very far to hit water.
Yep.
So one thing I try to remind people of is, like, whenever developers develop property, I mean, many of these are wet. And so they have to come fill and do the things that they need to do to actually make it buildable. just because it's in an X flood zone doesn't mean you shouldn't have flood.
Right.
And so encouraging them to just insure your asset, like insure what you have, protect it.
It's honestly, I mean, you can speak better this than I can, but I mean, it's sub $1,000.
Oh, easily.
For flood insurance for every year. And, you know, yeah, it's an extra cost, but it's one of those things that, like, God forbid you have to call upon it.
Mm-hmm.
You'd be really, really glad that you decided to have it.
Yeah. And that's what I think people have done, and they're asking more of questions, or maybe the same question more often, of like, what are other people doing? Mm-hmm. And it's like every single year, it's like, yeah, people are more and more buying flood insurance or taking flood insurance. Yeah. And there's some that are self-insuring for it, and, you know, they can do that.
Yeah, right. Praise God.
Yeah. The other thing too, I'll say, is if you're purchasing a property and you have a loan and you're not paying cash and you're in a AE, A, or VE flood zone, the lender's going to require you to have flood. Like, full stop.
Yeah.
They're going to require you to have it, and you don't have any rebuttal on that. You're going to have to purchase it. Okay. And so there you go. Something to keep in mind, like you asked, like, what should you know? If you're buying a home, you don't know that it's in a flood zone,
plan on flood insurance. Yeah. If you're buying in Florida, plan on having flood insurance as well as your typical homeowner's policy. Yep. Now, here's an FAQ for you. Does proximity to the beach impact insurance?
I would say it's a yes and no answer. Okay. Just because most of the carriers that write here, I'll give a couple different names. I mentioned Frontline. Mm-hmm. Olympus is one of those companies that's been around for a long time. We've been writing with them for a long time. Sage Sure is a company that's been in the market for a while. Centauri, Patriot Select. They're somewhat newer to the market, but they kind of rebranded. And so, but there's a lot of companies that they write up to the Gulf. So when you ask about proximity to the Gulf, I mean, it matters, but it doesn't, because they're going to write a Gulf front home.
Okay, because I have some clients that will ask, like, hey, if I have a Gulf front property, does my insurance premium different than like a block behind it?
I mean, I would say if it's within a half a mile, the premiums aren't going to vary too much. Okay. So if you're talking Watercolor, Seaside, Seagrove, all those communities around 30A, even if it's north of 30A, I mean, you're going to have to get into, even in North Santa Rosa Beach, you're closer to the bay. Right. So, and a lot of carriers will still see that as a wind area, a region of the coast that's susceptible to hurricane damage and those types of things. So really, you have to cross the bridge to get a substantially lower rate. Okay. In Freeport to Funiac, that sort of thing. And I think the reason is because if you build the Gulf front house, the builder's got to build to a specific code. Right. Right? Florida building codes they're not the strongest up here, but they're still really good. Yeah. I mean, you're not building block like you do in South Florida, Tampa, all of that. You're not required to do that. But you're still rebarring. All that stuff has to be wind rated to the stuff about peel and stick and roof and hurricane windows. All that stuff still has to take.
Our windows have to be rated for what, at least a 3, right?
Well, it depends on where you're at on the on 98, because that's obviously the thing that we use most often. So if you're north of 98, you don't have to have hurricane windows. But if you're building a house, just put them in. Yeah. Like, it doesn't make any sense not to.
Look at us on a map. If we get a good big hurricane, you'll feel it.
Yeah. So the rating factor for folks, this is something that it kind of drives me crazy. Living here for so long and insuring so many homes and selling and walking a lot of these properties. Like, I have a buddy right now, he's buying a 2019 house in Point Washington. It doesn't have hurricane windows because it's north of 98. And so
because it wasn't required,
which to me, that was kind of like the time frame line where Walton County was doing a lot of digging because Hurricane Michael of 10/10/2018 happened. So that house was had started construction not long before that storm and finished in 2019. And so around that time, it was like, okay, anything going forward has to have hurricane windows. But it makes a difference. Like 10 years from now, that premium on that house is going to be a lot.
Oh, yeah. Yeah.
It's just going to be a factor that you have to consider. So I would say that's another, just keep it in your back pocket of, if I'm going to buy a house, and I don't know if people think about this or not, maybe they just have an understanding of like, oh, it has hurricane windows because it's Florida.
Mm-hmm.
It's not always the case. So ask the question.
Yeah, the age of the house matters.
Yeah, absolutely.
Yeah, and that's a whole nother conversation. I feel like for a period of time, kind of surrounding the COVID era,
Yeah.
Quality of builds was questionable at best.
Yeah.
There was a whole lot of blinders on and stuff. So,
yeah. I'll say one more thing about your question, proximity to the Gulf, and kind of a picture. So if you go to the homes in Mexico Beach, Port St. Joe, that area, Panama City, and you look at all of the homes that went through that hurricane, all the new construction homes were standing. So there were multiple 3-story homes that, I don't know if you remember seeing some of those pictures. There's one specific I remember that was really close to the water. I think it was maybe a 2018, maybe 2017 year built home, and it was fine.
Mm-hmm.
It might have had some exterior damage from things hitting the house,
Mm-hmm.
but that's why, like, again, Florida building code matters.
Mm-hmm.
So if you're building a home, and that storm was a Cat 5 tornado, essentially.
Yeah.
It really wasn't a hurricane. There wasn't a lot of water. It was just a big windstorm that came through super fast.
I remember driving down I-10 a few months after, and just it was kind of crazy because the counterclockwise spin being in the northern hemisphere, you got this one section of trees that are all bent facing south,
Correct.
and then another section of trees all bent facing north from the rotation.
Yeah,
it's pretty crazy.
Yep. So yeah, you see all these. You can still drive even to the airport in some areas of PCB, and you see those trees just
they're still there,
cranked over.
Yep.
Yep. So we talked about homeowners. Well, we didn't really talk about homeowners, like in the sense of like primary, secondary homes. That's pretty simple.
Mm-hmm.
The short-term rental market is probably the other area that we could probably get into, because so many people and clients that we work with, they're buying to invest.
Yeah, let's go ahead and touch on that.
Yeah. I'll ask you, like, you've sold some homes in Seacrest. That's kind of been a good community for you. Are the buyers and sellers that you're working with, are they doing short-term rental in there?
Yeah, pretty much much everybody that's buying along 38, they're at least entertaining it, not necessarily for the sake of like, it's gonna be a return machine, but they want to leverage their property. Yeah, at least mitigate their costs.
Okay. So any things that they ask or things that you can think of whenever they're talking about short-term rental that come up that maybe relate to insurance that we haven't talked about?
Yeah, whether or not they should purchase a golf cart, or if they should use the golf cart, like if the property manager provides one, or what that system looks like. Obviously the liability of having other people in your home, like how that impacts the policy and that kind of stuff.
Yeah. I forgot about the LSV stuff. That's actually pretty hot topic.
Yeah.
I'll talk about the liability side.
LSV meaning low speed vehicle.
Yeah, low speed vehicle. A lot of people just assume, oh, it's a golf cart. It's
like a go-kart, yeah.
Yeah, do whatever I want with it, but yeah, you can't. So when people and buyers are looking at short-term rentals, it's a handful of different ownerships, meaning you have some people that will buy in their individual name, some people will use their trust, and some people will use a LLC or a corporation. So back in the day, it used to be really difficult for like a corporation or LLC type ownership, but insurance companies have come quite a long way to accommodate for that and to make sure they're giving some sort of coverage. And there's a lot of things I can go into that I don't have time to on that, of why they would say, oh, we're going to exclude liability because of the LLC or whatever it is.
Okay.
So now, like, Olympus is a company that writes a ton of short-term rentals. Frontline writes short-term rentals. There's some other companies that do, like Monarch Insurance. Cabrillo Insurance is another one that does short-term. And we'll talk about condos, but Cabrillo writes condos as well. But the liability side is so important because I deal with this pretty often, and I don't know why it is that way. Maybe it's just the number of policies that we've written, but people fall down stairs.
I didn't mean to laugh. Why are we laughing at that?
Maybe it was just the way I said
Yeah.
it. But like short-term rental homes have claims way more than people realize.
Really?
Yeah. Yep. And so I remember 1 year ago, I don't think we had the policy, but it was a condo. Some guy the family was using the unit, and on a condo you have those big, huge sliding glass doors that are really heavy.
Mm-hmm.
Something happened where he got his finger caught and it slammed shut. Oof. And he lost his finger.
Yeah, that'll just kind of cut it right off.
So he sued everybody.
Jeez.
So that's one example. There's other examples where, again, like the common one that I've heard that we've experienced as an agency is like, oh, the renter fell down the stairs. And it's like, okay, they're going to sue.
I shouldn't be surprised. It's a vacation community by the beach where
Yeah.
spring breakers and drinking happen often. So
Yeah, and I don't even know if it's, an intoxication thing.
you also get a lot of families with older generations,
Yep.
Yep,
you get some of that. And so just know that when you're buying a house, and yes, typically your insurance policy is going to have liability. Sometimes it doesn't. Again, sometimes there's exclusions because you own it in a certain type of way.
Mm-hmm.
It's deeded a certain way. But typically your coverage is $300,000 max for liability. You can exhaust that pretty quickly.
Yeah. My mom's going through something with an insurance deal like that, and
Yep.
I'm sure this got burned through real quick.
Yeah. So, I mean, someone that,
Attorneys
God
are
forbid,
expensive.
they get, they're in a wheelchair or something, they break their neck or something crazy happens.
Mm-hmm.
That's not happened, but people have, broken bones and had serious things happen. And so
Sure.
medical bills can add up and insurance companies can pay out a lot of money. So what we advise people to do is to write a secondary liability policy. It acts somewhat like an umbrella.
Okay.
Because what a lot of folks don't understand too is you have folks that, again, they're in Dallas, Nashville, Atlanta. It's like, oh, my umbrella will pick up. No, it won't. Typically, the umbrella doesn't extend to a short-term rental in Florida.
Okay.
So you got to check. I had the conversation, I think, multiple times this week with a client with multiple clients. Check your carrier, because he's like, yeah, I got a $5 million umbrella. I'm like, okay. I mean, that's great, but typically your carrier is not going to extend it because of the exposure.
Mm-hmm.
Like that's not their game. That's not their appetite. They're not wanting to insure your short-term rental. It's got, 36 weeks of renters in it. So having an additional liability that gives you $1 million of coverage, it's really simple. I mean, it's wise to have it and prudent to have it.
So you can add on a policy to expand that 300 out to say something
Yeah,
like
essentially,
$1
again, it works almost like an umbrella where if you have a claim and it needs to be filed, you can file on both at the same time.
Okay.
So a typical umbrella policy, you're going to have to exhaust your underlying coverage first
Mm-hmm.
to get into the umbrella. But this works a little bit different because it's not a true umbrella. You can actually file at the same time.
Okay.
And just have those in place. But
okay, good to know.
It's not expensive usually to have that policy. And again, if you're investing in a $2 million, $3 million house in watercolor or $6 million house in watercolor, I mean, I think it would be wise to have that policy.
Yeah, I think my takeaway from this episode is, I mean, I've always advised people if they're working with a lender, at the very least, have that conversation. But I will now add on, talk to your insurance agent, talk to a local insurance agent as well.
Yeah.
Just to kind of factor in all these variables.
Yeah, I mean, I've started, as long as I've been doing this, started having, I would say more intentional. I mean, I'm usually pretty intentional about conversations, but like, okay, you have all this risk. You probably don't know what you have or what risk you're getting yourself into with all these different things. And to your question a minute ago with the LSV stuff. So LSVs are typically here, they're tagged and titled for road use, meaning you have to have a plate.
Mm-hmm.
You have to have the registration. You have to go to the DMV and have all that stuff done with the county. And so if a buyer buys a house and they want to purchase an LSV, they can do that. Like, totally fine. Sometimes the house is sold with it, with the LSV. When you purchase your policy for the house, which is typically what's called a DP3 policy, it doesn't extend to the golf cart.
Right.
A lot of people, I think it does. It does not.
Mm-hmm.
Also, I think a lot of people think, well, the renter that's renting it, they'll have coverage whenever they use it. Not always the case either.
Right.
So we have one company that writes a policy, and they're out of Utah. It's like $6,000 a year to insure an LSV.
Wow.
It's very expensive. And again, to insure it the correct way, it's expensive. And it for a reason. I mean,
does insurance differ? Not to cut you off, but
no, it's good.
Does insurance differ on a golf cart here for someone who buys it for personal use versus? Okay,
100%. Yep. If you use it just for personal use, and like if you wanted a golf cart for your house, you could do that, and it's around $300 a year.
Yeah.
Versus $6,000 a year.
You're talking about recreational use versus.
Yeah, exactly.
Gotcha.
Yep. So the thing that I've advised for a long time is find a fleet commercial business that has a fleet of LSVs.
Mm-hmm.
Get them to rent or get them to provide a cart.
A contract, yeah.
Yeah. And you can pay, I forget what it is, but you can pay whatever their amount is, and it's going to add up to being very similar to what it would be if you insured it yourself. But you
don't get the phone calls.
You don't get the phone calls.
Right.
Yeah, the liability is not attached to you anymore.
Yeah.
And so you just get that out of your risk assessment, so to speak, and it's just it makes things a lot easier. But hey, if you want a golf cart though, great.
Yeah, I agree. No, that's great advice, and that's something that I've had come up several times, and I've advised that same direction. I think it's kind of like when people say they want to self-manage their property. It's like, you can totally do that, but just remember at 2 a.m. if something goes wrong, it's your phone that lights up.
Yes. Yeah. Typically when doing self-management too, you're not going to generate as much income on a rental. I mean, I'm working with a client right now where we looked at a condo unit yesterday. I think we're going to look at it today. And the current management company is the owner.
Okay.
And so he's not generating as much as he could.
Right.
I mean, by a pretty substantial percentage. And so there's so many good short-term rental management companies here.
Yeah.
Like, use them.
Yeah.
Pay the 18-20%, and
it's worth it just to take that headache off your plate.
Yeah, absolutely.
We're pushing pretty deep into this episode, but I feel like there's some things we didn't touch on too much. I mean, do you want to touch on condos at all, or
I think that's probably the most confusing thing. Not buying a condo, but on it, obviously insuring. Yeah, on the insurance side. So, a condo itself is going to have a master policy.
Right.
It's going to have their association master policy, and it stops essentially at the sheetrock.
Yep.
And so most people, I mean, this. I think a lot of realtors know this. Sheetrocking in is the owner's responsibility.
Yep.
It's floors, walls, ceiling, whatever it might be. Any fixture that's actual structural, that's your responsibility. And so typically you're going to insure a unit for $90 to $110, $120 a foot, because it's not the whole envelope, it's not the roof, it's not all that stuff.
Right. So
you don't have to pay the whatever $300, $400 a foot for replacement costs because it's not everything. So that's important to know. You have your content still. It's really interesting. For 19 years, a lot of people that buy condos, they don't get insurance, and then they call me. Then they call, and it's like, oh yeah, I forgot. And I think that's just because they didn't realize that they needed to get the interior.
Is a condo policy similar to like a renter's policy, where it's just basically all your stuff?
I mean, to an extent, but again, if you're gonna insure your walls and your light fixtures and your kitchen and all of that, I mean, that's
totally different ball game, right?
Yeah, on a commercial policy, or even sometimes in the industry you call it betterments and improvements. IB or BI, it's just a language or acronym that you use. And so again, it's the improvements that are made to a unit, and I would say you'd want to insure that.
Yeah, that, you
Not
put
just
Venetian plaster on the walls.
Yeah, exactly. Yeah, if you're in Alice and you're buying one of those units, it's probably wise to have that coverage. So again, that would be different. You know, the price per foot on something like that would be a little bit different than, you know, Shores of Panama or Beechcrest or some of these other units over here.
Would you say that the insurance perspective is one of the advantages to purchasing a condo versus a single family home?
Not necessarily.
No? Okay.
No, just here, which is a good thing, we don't have a bunch of high rises.
Nope.
Which means a lot of them are frame construction. And so when you, again, we didn't talk about this a lot, but the construction matters
Oh, yeah.
on condos. And a lot of those condos that we have here that are frame, they're not new. So we have one right here that's being built that's going to be masonry superior construction, which is good.
Yeah.
I think it's a 4-story because you can't do anything over 4.
Right.
And so the advantage of the condo, I think some people think that it's advantageous on the insurance side, but I mean, it really just matters the age of the house and updates, just like a standard single family home.
Okay.
All that matters.
I have one more question in regards to condos.
Yeah.
What did the Surfside collapse do to the insurance market in regard to condos, or did it do anything?
I'm actually not familiar with that.
The Surfside collapse in Miami when that condo collapsed?
Oh, you're talking about, okay.
That's when we started getting the special
Yeah.
engineering surveys and all that
all
stuff.
the assessments and
Yep.
things like that.
Yeah, I mean, that's all the condos. They started getting grilled for that kind of stuff, deferred
Yeah.
maintenance and whatnot.
Yep.
But I didn't know and hadn't heard of whether or not that did anything in the insurance market for condos.
As far as I know, I don't think it changed a whole lot.
Okay.
And again, the Miami, Broward County, Miami-Dade, you know, St. Pete, all that stuff in South Florida is different than it is up here.
Okay.
But still, I mean, to your point, when you're buying a condo, like, you need to be aware of
The special
the
assessments.
special assessments.
Oh yeah. Oh yeah.
Because I think some people think, and maybe it's a higher percentage than I'm giving credit for, insurance isn't going to cover that.
Oh no.
Insurance covers a claim.
Mm-hmm.
It's not going to cover all the wear and tear on a condo. And I could list a number of condos that have gone through all that.
Yep.
Balcony updates, waterproofing, all those sorts of things.
Yeah, which was all like I mean to kind of get to the faith aspect of things,
Yeah.
but like how the Lord works all things for good. It's like you had this tragedy occur. I think about like Mexico Beach.
Yeah.
Mexico Beach was kind of unheard of, and then
Correct.
Hurricane Michael came through, and then they've kind of went through this like renaissance and rebirth as a result of it.
So true.
Same can be said for that.
Yeah, I would say one other thing about the condo, and I think this is probably the biggest thing, is the inspection. So a lot of the conversation I have with realtors and with buyers or the question that's asked, it's like, why do I need to get an inspection? I'm just insuring my unit. I'm not insuring the building.
Mm-hmm.
So regardless of that, the insurance company is still rating the building.
Yeah.
And they're giving you coverage for your unit.
Your sheetrock has a lot better chance of getting ruined if the roof is crap.
Correct. Mm-hmm. It's exactly right.
Pardon my French.
Yeah, so the way that the roof is put on, if it's updated, if it's not updated, all those factors matter. That was terrible English. So the 4-point, this is kind of the biggest one of like, you know, the condo is, I don't know, a 2012. It's masonry, superior construction. Why do I have to have a 4-point? Or why do I have to have an inspection?
Mm-hmm.
Well, you still have to show the insurance company that it's built a certain way.
Right.
So you can get your credits. So you can show that maybe 2012 isn't the best year, maybe 2010. Like the water heater's been updated. Mm-hmm. The HVAC's been updated. You don't have any electrical issues. You don't have any plumbing issues, all that stuff.
Right.
And so having a 4-point inspection done is a requirement still on a condo.
It's kind of like finding out if you have a pre-existing medical condition when you're getting insurance,
kind of.
right? Yeah.
Yeah, I think there's just maybe a presupposition or some type of there's a expectation when you're buying a condo of like, oh, this is going to be really easy. It's different than a single family home.
Mm-hmm.
And it's just not true.
Okay.
And so you got to still take those factors, bring it to the table. Again, do everything you can to make it really easy for the insurance company to write the policy and give you the best rate.
For as cheap as possible.
Yeah.
Diligence continues to be important.
Yeah. Do your due diligence. And I think for agents, for us, and I'm going to do a conversation with our team next month and talking about some of this stuff too.
Cool.
And just updating everybody, giving probably some more granular stuff than we've done here. But yeah, I think we've actually covered
pretty
everything.
Substantial, a lot.
I mean, we do, as an agency, we write Medicare insurance, we do health insurance, we do auto insurance, life insurance, we do annuities. I'm trying to think if there's anything else that would be beneficial for people to actually know. The Medicare space actually here, because there's so many retired folks, is important.
Okay.
And so Medicare is honestly, it's one of my favorite things to help people with.
You might want to save that one for another day then. Have a
Medicare
episode.
Yeah, maybe I can get Garrett in here one day or somebody like that.
I was about to say, get Garrett in here.
Yeah, we'll have a Medicare conversation.
Exciting stuff.
Yeah, right. I mean, insurance can be boring, but I mean,
it's a part of adult life.
Yeah.
So
Yeah, you have to know what you're doing.
Yeah.
Yeah, you got to be aware of all the things. And
well, here we are talking about a boring topic 56 minutes in.
Yeah,
so.
Has it been that long?
Yeah.
Dang, dude, that's awesome.
You're in your bag right now.
Yeah, I mean, it's honestly just been a super amazing blessing.
Cool.
To be where I'm at. So
yeah, well, it's a huge blessing to have you on the team and be able to kind of have our finger on the pulse of the insurance world and real estate world. So the two go hand in hand. So
yeah, that's awesome, bro.
It sharpens me up. I appreciate it.
Yeah, dude, absolutely.
Anything else we need to add before we close it out?
I don't think so. I think
Okay.
we're good. Yeah. Well, I'll say this: if you have questions, like I think Russ has mentioned this before, reach out to us. I mean, we're here locally, Santa Rosa Beach. If you're not local and
reach out anyway.
Yeah, I mean, reach out through social media. Come by our office. I know there's a lot of people that may see this and you don't live here. Maybe you vacation here. Subscribe, let people know that we can help them. And again, we're doing everything for the glory of Christ, and we're wanting people to be successful in their business. And, one of the things that I think take pride in as an agent and whether it's insurance or real estate is like, I want to do my best so that person can actually do their best in what their job is. Yeah. They don't have to try to be the insurance agent. They don't have to try to be the real estate agent. So that's a big thing. I think that's super helpful. So, but appreciate y'all listening, and we'll catch you on the next one. Grace and peace.
Peace.